Good evening everyone and welcome again traders. Today we will gonna show you how to trade with different pivot point strategies. Today Chris is with me and as I said we will talk about trading strategies with pivot points. Before we begin, our quick risk disclaimer. Risk disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with us. Online educational materials are developed by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the authors, me and Chris, and in no way it represents the actual suggestion for the trade. These are not MUK's opinions, and the website in the video is not the .co.uk website, but the globalnews.com website. Forex is risky business, and this is a personal opinion only. This webinar is for informational and educational purposes only. So, what are pivot point structure, types, and practical usage, where I will show you two different I can say price action methods, how you can practice trading pure Camarilla. It's not Camarilla MACD, it's Camarilla indicator, and pivot point intraday strategy, which has 200 MA on the chart. So first, let's see what are pivot points. Technical indicators which are used to determine important support and resistance levels. As you already know, in everyday analysis we use pivot points a lot. And pivot points, some traders use daily pivot points, some traders use Fibonacci pivot, some use Camarilla. As you know, I am fond of Camarilla, and I use it in my method Camarilla MACD, then Maremat, then there are many different pivot points, Woody pivot points, and so on. So basically, the best definition of pivot point is that those are the levels where price reacts. So around pivot points, price tends to bounce, tends to reject, and tends to congest. So basically, pivot points are important levels when price reacts. Usually, the pivot points are the average of high, low, and closing price from the previous day. Some use different calculations, but this is a standard calculation for pivot points. Sometimes and very often, pivot points are used to determine market sentiment. Usually when we see a Camarilla indicator in action, if the price opens above H4 and between H4 and N5, we can assume that price is indeed very bullish, so we wait for a retrace. Also, there is very common with a standard pivot point indicator. If price opens above R1, which is resistance, the first resistance, above pivot point, and if the price opens up there, we assume that they indeed will be bullish and that the price will retrace to give us a proper entry. Usually, pivot points are used on intraday basis. So we don't use them if we trade monthly, weekly, and even daily charts. Pivot points are mostly used in intraday trading when traders want to trade a price for that particular day and to determine target prices, full target potential, and a stop loss. I always advise to use pivot points in confluence, because if pivot points are indeed, if they are made in confluence with other useful price action tools, they can give you a nice zones for either bounce or a drop. As you already know, I use POCs, which basically are zones for entry orders. And there are different things how I calculate POCs. I will show you today how to use confluence with pivot points, standard pivot points, weekly and daily. Also, pivot points have been used and been originally used by floor traders. So floor traders basically gave us a complete insight in a foreign exchange pivot points. Usually, last session's high, low, and close price are calculated into the full algorithm of pivot points. New York closing time usually is used, and that's good because our platform corresponds to New York close, GMT +3. And as I said, there are a lot of indicators which plot pivot points. Formula, this is formula for basic calculation of pivot points. It is high plus low plus close divided by 3. So when we get a pivot point, we say that that is usually a base. Above this base, we have first resistance, second resistance, and third resistance. Then we have below the base, we have first support, second support, and third support. Usually the calculation in pivot points uses 3 resistance above daily pivot point and 3 supports below daily pivot point. But very often you will find indicators which plot 2 additional levels, resistance 4 and resistance 5, and S4 and S5, which mark basically support 4 and support 5. So you will find many different pivot points, but the standard calculation is this. And high plus low plus close divided by 3 will give you daily pivot point. So daily pivot point is usually, as I said, a base for placing new orders, for placing possible short or possible long. And daily pivot point is a great vantage point, basically for further direction. So usually when the price retraces to daily pivot point, it tends to jump, usually giving us 10 to 15 pips of profit. If you followed my analysis today, let me see, I also posted it here. This is basically, yeah, this was Odyssey VC. At the first touch of this POC one, which stood at 85.10 and 85.00, 85.10 and yeah, 85.00, this was the second POC. Basically the price did touch this pivot point, which has a confluence with upper channel L3, and which is also not a big number, but it's 38.2 fib, and initially it gave something around 20 pips of a profit. On this trade I entered at basically I entered around 85.05 and I was stopped out for 15 pips of profit. My trailing stop was a bit of maybe narrow, but 15 pips, well, it was like I was doing a scalp swing trade. So basically what I'm saying is daily pivot points are usually, if they are used in some sort of a confluence, they can be very good for those first touches of the level. So would it be for scalping or for intraday purposes, or maybe to turn a scalp into scalp swing and then into intraday trade? It doesn't matter. Usually they will give you initial pips, but sometimes we need to protect ourselves. As I'm telling you, usually we need to know the method which we are trading, and now today I will show you general rules how pivot points are traded. Me and Chris, of course. But the thing is, every method has different form of using those pivot points. As you know, I'm very fond of Camarilla, and I use confluence of different price action tools for proper calculations. And this is only one part of Camarilla MACD. My analysis usually go with the trend trading, because I know that 95% of traders will go with trend trading, not with counter trend and with breakouts. Scalps are impossible to analyze. So the analysis usually represents a trend intraday trade. Sometimes I put in a counter trend trade, and sometimes I go with breakouts. But usually analysis covers trend intraday trades which have been really very profitable. This is the calculation of pivot points. So that is basically the structure of pivot points. Now the thing is, as I said, standard pivot point indicators, Fibonacci pivot points, last week support resistance indicators, hourly pivot points, Marionette pivot points, Camarilla. Those are all different pivot point indicators and calculations. You know about hourly pivot points. I presented that on premium webinars, so you probably know what hourly pivot points are about and what basically how you can use hourly pivot points. Important thing is if you're fond of pivots, you should always have weekly pivot points and monthly pivot points on your chart. And I will show you later why it's also very good. Typical usage of pivot points is for identifying the trend on higher time frames, watching reaction around pivot points. Then we can place entry at pivot point, stop loss, and exit. It can be plotted on every system as additional indicators. So pivot points are the main core of the system. When we will have a webinar about how to create your own system, pivot points will surely be one of those important indicators which basically will tell you how to, and will give you the very basic knowledge where to watch those price reactions. And I will show you how you can try and what tools you have to have on your chart in order to make a system. So on that particular class, I won't be talking about any particular system, but I will be telling you a guide which generally you need to use in order to make your own system. And that kind of system will not be cluttered with many indicators. Couple of them will be enough. So those are typical usage, and as you know, pivot points usually can be found on any different system, on any system. It doesn't matter where it is, a price action or indicator or whatever. We need pivot points to see price reactions. This is a standard pivot point indicator which plots in between those resistance which are marked blue, R1, R2, R3. Those are mini resistance which are basically half of in between of R's. So M, R1, mini resistance 1, mini resistance or middle resistance, and so on. Same for support. Then we have Fibonacci pivot points, which use basically Fibonacci calculations to determine support and resistance levels. Then we have hourly pivot indicator, which I already gave you for premium members. Then Camarilla, and this is what I will tell you about Camarilla. I will give you 4 different scenarios how to basically trade Camarilla, so pay attention to this. This is important. So general rules for Camarilla are: if the market opens between H3 and L3 level, you must wait for price to approach either of those 2 levels. Whichever level it hits first, it gives us the first trade. I will answer your questions later. Alexander asked where are pivot points to download. So where you can download pivot points. Easily, just Google pivot points on the internet and you will find many different pivot points to download. This is, now I'm talking about Camarilla pivot points. General rules. If market opens between H3 and L3, usually you need to wait for the price to approach either of these levels. Usually if this is H3 and this is L3, if price opens up, and price will open up usually below H3 and L3, the first touch of this level will give you usually a scalp trade, or the touch of this level will usually give you a scalp trade. So L3 and H3 initially give you scalping trades, but it doesn't necessarily mean that scalp trades can be turned into scalp swings or scalp swing into intraday positions. But usually those are good for spotting a confluence. Hourly pivot points indicator, I gave you, I didn't give you, but Admiral Market Support sent you the indicator just prior to my hourly pivot point webinar. So I hope that you received hourly pivot point indicator. If you are a premium member of Admiral Markets, that means that you have a live account with Admiral, then you should have received hourly pivot points indicator. If you didn't receive it, yeah, good, then that is a great, Mildred. Excellent. That's great. If you received it, great. Now, let's get back to Camarilla. If you didn't receive it, I will send you, no problem. Just email me for hourly pivot point, but please, for all of you who are clients on Admiral Markets, I can send you. If you're not clients with Admiral, then unfortunately I cannot do that. So only if you're clients. And just send me an email. No, don't worry. Camarilla, we get back to Camarilla presentation. Camarilla general. If we want a short trade, we look for the price to bounce back down into H3 level again before entering the trade. Stops are usually placed above H4 for short trades and below L4 for long trades. If the market opens up outside H3, somewhere around there, or L3, we should wait for the market to retreat back to L3 or H3 as we trade with the trend. So basically I will show you those 4 different strategies, so don't worry. So these are general rules. There are 4 general different scenarios. And yet again, I'm repeating, this is not Camarilla MACD, this is standard Camarilla presentation. So you can use also this strategy to basically try price action. This is pure price action. You don't use any indicator except Camarilla. And it actually, you can see the power of Camarilla if you have the patience to use it. So the first scenario is price usually opens up between H3 and L3. So this is the first scenario. For long trade, you should wait for the price to go below L3, and then when it moves, or if it moves back above L3, you should buy. Stop loss should be just below this level. For short trades, price opens up here, then it goes above H3, but closes below H3. When price closes back below H3, sell. Stops are here. I will, after these 4 scenarios, I will also pause the screen for you to capture, because I have it also on PPT, all 4 scenarios. So this is the first scenario. The second scenario is when price opens between H3 and H4. So H3 and H4 is scenario 2. For long trade, when price directly moves above H4, you buy. Stop loss is below this level. This level is considered a breakout level. For short trade, if price goes below L4, which is short breakout, you should sell. Stops are there, target is L5. So this is if initially price opens up in between H3 and L4 on after the midnight, or in between this level. So you need to watch price at that particular time. And you should be prepared to do some babysitting. Scenario 3. Price opens in between L3 and L4. For long trade, if the price opens up here and if it closes above L4, you should buy. Stop loss is just below the level. First target is pivot point, second target is basically H3. If the price for short sell, again, price was there, but if it goes here and closes, you place your stop loss here, making it target this L5. And scenario 4, price opens up between H4 and H5 and L4 and L5. What you should do is price needs to come in the range between L3 or between H3 and L3 or L3 and H3, and then you should trade accordingly. So if the price opens up in between L4 and L5, that is usually a sign of a very bearish market or very bullish in this case, and you need to wait for the price to retrace to use one of those 3 scenarios. Okay? And this is the resume of those scenarios. So now you can take the screenshot. Basically, this is pure price action. With Camarilla, you just don't use any indicators, and it's very, very simple. Okay? It's pretty straightforward. And that is how you can trade only Camarilla levels without any indicator. Now, this is pivot point strategy. So these rules are also simple. First, you need to have pivot point indicators, daily pivot points, which mark daily pivot point S1, S2, S3, R1, R2, R3. Then you should have weekly pivot point indicators, also on the same chart, which will plot weekly resistance 1, 2, 3, and weekly pivot point and weekly support. What you do is, it's very simple. These are the rules. So you need to have 200 exponential MA for trend direction, slope, daily and weekly pivot point. Price is ideally above for longs and below 200 EMA for shorts. You need to find pivot point confluence, usually with EMA, but it doesn't necessarily need to be with EMA. The best thing is to find pivot point confluence. Then you need to connect swing points and just wait for the price to break out. So in this example, we can see that the price is below 200 EMA, and we can see that in this point there is basically a confluence of weekly pivot point and R2. We connect 2 swing points, this point and this point, and wait for the breakout. This is basically breakout of this confluence, and you can see how price reacted. This is for long trades. You see many opportunities, and 1 hour chart is enough for intraday trading. This is basically the first confluence seen here, and you can see 1 swing point, 2 swing points, price broke that swing point and went to the upside. Ideally, price should be as close to the confluence point as it could be. In this point, we see a confluence of support, intraday, and weekly pivot point. You see how the price reacted. We just connect those 2 swings, and basically you can see, you just put a steep trend line, and you can see how price breaks through it. Same would happen on ODCAT probably if the price, now if the price goes above this level here, it would be a breakout above. Actually, this is a daily pivot point, and we have a confluence of daily pivot point and weekly resistance. They are very, very close. So ideally, the confluence should look like this. This is ideal situation when confluence points are very, very close. But usually those buffer can be around 10 pips, and we can say that those points are in confluence. So that is how you can see the price, how price reacts to pivot points, and you can see how indeed confluence makes for the price a very, very strong support and resistance levels. So actually, these are two things which I wanted to show you, because there are not a lot of strategies with pivot points. You usually need to have one or two indicators or price action methods such as Camarilla MACD, or I don't know, hourly pivot point indicator to scalp. So these are general guidelines how you can find confluences and how you can try to apply steep trend lines, EMA above or below pivot point confluence. And of course, Camarilla indicator, which can also be useful if you want to see how price reacts to those levels and how those different strategies can be traded. So you can apply these kind of things to your system and see how they behave. But generally, I need to say, and I will always say that the bigger the confluence is, the stronger the level is. Now I will hand the presentation over to Chris, so he will show you his insights with pivot points. And if you have any further question, do not hesitate to ask me. So after Chris finish with his presentation, and if anything isn't clear, of course, you are free to ask. So Chris, you can continue if you are ready, of course.
Good stuff. Thank you so much, T. Definitely.
Thank you. You're welcome, C.
Let me start to share this screen. So good evening, everyone. Thanks for joining. You should be able to see my screen now. That's the first thing that is useful. And this we can, wrong slide again. There it is. Good. So pivot points. Good explanation from T, covering various aspects of what pivot points are and how to trade them, and discussing other types of pivot points. What I want to discuss with you is the method for trading, providing confluence, and the zones of the day and week. So let's get started a bit, focusing on how you can use them. Pivot points advantages, first of all, is the fact that I think that they're quite mathematical, right? They're mathematically calculated. Obviously not quite. They are, as Nena just showed you. They're non-discretionary and they are heavily used. So I think those are pretty good advantages for people, for traders, but also for beginners, because the advantage is that we can use them without plotting them ourselves. That I think is a big plus, because other things like Fibonacci, for instance, you still have to plot the fib yourself, which has the drawback that a trader has to learn to plot the right one. It is certainly something that gets learned with experience, but still you have to put that time and effort to learn it. And it's not very difficult, but it still requires some practice. This is something that from the bat, obviously, you can just have on a chart, like more indicators, of course, but still the fact, of course, how to use them, that still remains. That's always the most important, even with indicators logically. But still, it is a bit of an advantage, the math, the fact that it's really used a lot and it's non-discretionary. So the pivot points, what I wanted to discuss basically are the daily, weekly levels and the Camarilla levels and the zones that are connected to it. So basically I want to talk about the zones of the day and the week first of all. Then we'll talk about providing confluence and then methods for trading. What I mean with the zones, let's take a look on the live chart, if you don't mind. What I mean with zones is that when you look at the day R1, daily R2, daily R3, and of course the S levels as well, basically what you're looking at is the likelihood of a price getting so far. And obviously price getting to a 3 level is less likely than price hitting a 1 level. So if you're looking for targeting a 3 level or waiting for price to get to the 3 level, then you'll be on the sidelines for a good percentage of the time. I used to know those percentages by heart, but you know, it's not going to be that often. It could be as low as maybe as 10%. Obviously, levels 2 and 1 are hit more often. So, you know, this is something that we can take into account when trading in general. First of all, when you look at your chart and you see price at a past an S2, well, then you might want to be careful with trading breakouts. For instance, on this pound dollar, if I may point to the fact that it's below the S2 already here, as you can see, you know, you might want to be careful with taking more shorts to the downside. Let's face it, there's not much space maybe left. London is closed as well as an extra time filter. So, you know, this type of trade would not have a high likelihood of seeing good success. So you can use the pivots to have an indication of that. We talked about the pound dollar in the trading room today, this morning, and said if there's an hourly rejection bar, I would like to short that particular candle, which we had indeed a shooting star at the daily pivot point. So this is actually a wonderful example of how you can trade pivot points with candlestick patterns, by the way, but this is something I'll dive into later. I'm mixing stuff. I don't want to mix it up now. It's just to go that if anyone did take that short, you know, a S2 is a good daily target to aim for, and if one would have done that, it would have been a good 60 pips. Although price did push through a bit further down, it's 60 pips is nothing wrong, and that was a good trade that occurred right after we closed the trading room and we discussed in the trading room. So that's how you can use the pivot points, obviously, to your advantage. Now, you know, in a day like this, sometimes you can not only read what kind of zone you are in, that is one way of doing it, but you can use them to trade. That's something we'll discuss once again later on. First, I want to discuss the zones. If you use the Camarilla, you can do the same thing, obviously, to have an idea. L5 is the target, so you don't want to look for shorts anymore. If price is obviously in between L3 or H3, you could have more potential. You want to be more careful with, for instance, taking pullback trades. For instance, you could, if there's a good moving average, if there's a good angle to the moving average, you could think of breakouts, for instance. Whereas if you're below the L4, already halfway, let's say, trading breakouts, you know, there's not much maybe expectancy for such a trade. So you might want to wait for a pullback before trading it. So, you know, you can adjust your expectations to how you want to maybe trade it potentially or totally not trade it depending on those levels and those zones. Sorry. The same would be valid for weekly levels. It's just obviously you don't need to look at that much at weekly pivot points if you are on a 50-minute chart, but if you are trading a 4-hour chart, you could do the same thinking and the same thought process with a 4-hour chart and weekly pivot points. Let's take a look at pivot points and confluence, because as Ned said, confluence is very important when trading. You know, you could look for multiple pivot points. You could look for various pivot points like a Camarilla or ATR, or you can use classical technical analysis like trend lines and Fibonacci levels in combination with pivot points. There are a lot of other things that you can use. These are just examples. Point is, support and resistance, obviously. Point is, or today we saw, for instance, a supply-demand indicator in the webinar, live trading webinar this morning. Also in combination with pivot points. So it's good to look for confluence. So let's take a look on the charts again. All right, so the candlestick pattern at the daily pivot point is, of course, a confluence, right? There are two things that are making us look for potential short. Also, we have moving averages clearly on the hourly pointed to the downside in the bearish mode. If you really want to go into more fine details, the pound dollar had broken already the 170.40 support level and was below that for several substantial time yesterday. You know, extra things basically from a higher time frame from a weekly chart. Those are all extra confluences that make a shooting star at that point on the pound dollar an interesting trade setup. Euro dollar, this is the wrong template, hang on. Pound dollar, for instance, had a harami at the R2. You had another confluence between candlestick patterns, or actually you can hit the R3. Now that harami didn't have much follow through as yet, so I mean not a lot of pips would have been made, but still not necessarily. Still a trade that is moving into, that is in bullish territory. In fact, there's also an H5, by the way, so there's confluence at that resistance level. So not prices actually using daily pivot point as a support. So in that case, if you look at that as a potential target, then you would maybe want a retracement of the harami before aiming for or entering that trade. But this is just an example of a confluence. Now, at some points, obviously, you would like to maybe trade an R2. At some points, you might want to skip an R2 or an S2. At what point would you like to do that? If you are in a downtrend, what the euro dollar is, trading an R2 is more attractive, right, than if you are in a downtrend and you want to trade the S2, right? The R2 in a downtrend is a resistance. The S2 in a downtrend could be just a temporary pausing spot. You see the difference? So that's something that you would like to maybe distinguish when analyzing it, the trend, obviously. When you're in a downtrend, the R2 is a good level to look for maybe a turnaround back into the trend. If you're in an uptrend, the S2 could provide the same. So it's basically trading pullbacks within trends. If you turn it around and you're trading the S2 in a downtrend, then you're looking more at reversal potential, of course. Not to say that that couldn't necessarily work out, but I would look for extra confluence reasons to take a trade like that, because there is certainly a risk that price will not make a bounce at that spot. The Aussie was a reversal trade I was looking for this morning. For those that were in that session, you might remember that. Looking for a head and shoulders here, right, like this. Excuse me. And we did get the bounce here. We were getting a bounce when it happened. So was there some confluence at that level? Really not any confluence at that. So that was not an easy trade if anyone took it, because the weekly R2 was there. So maybe on a higher time frame, but not anything necessarily else. Let me check. No. So yeah, that was not an easy one, right, to trade. That rejection there. And the only thing that could have been done maybe was a fib. If you really like the head and shoulders, is basically a fib, and price didn't even get to the 50. So this was not an easy one and really difficult to catch, but it did move down eventually. So an example of where confluence is not given, basically. Okay, so last but not least, the next part, which is looking at bounces and breakouts. The bounce could be an immediate touch if one really likes a trade, even a pending order. A confirmation would be waiting for a candlestick. The other way of trading it is obviously breakouts, right, when price pushes through. So let's discuss this in more detail. Bounces, for instance, on a 30-minute chart or the hourly at a pivot point is a strategy or waiting for the 4 hour. If you're more of a swing trader, you could use the 4 hour at weekly pivot points. Let's take a look at that. Today, the pound dollar, no matter what time frame you look at, right, as an example, 30-minute and 1 hour are showing that. The euro odd had one swing trade at engulfing twins at the weekly. So that was those are examples of a swing and intraday today and this week. Euro odd happened on Tuesday. So that would be something that a trader could capitalize on when trading that, or even this engulfing at the monthly, right? Sorry, the other way around. The harami at the two haramis here, for instance. Excuse me. So what kind of parameters would a trader look for? Stop loss, for instance, 7 pips. It depends. I like to use uneven numbers though. The stop loss on the 4 hour chart, 15 to 17. TP, 21 EMA close, using the 21 as a trailing stop loss. Fractals as well. Ratios, I'm not a big fan of that, but possible. Support and resistance, fibs, and scaling out. I'm really flexible with this personally. Those are all valid in my opinion. Actually, I forgot to mention fractals as well. Fractals, good level as well. So I like to use a mixture of these methods. It suits my psychology nicely because I take some profits along the way, but also allow the trade to develop into a bigger win, which occasionally happens, and that's always good for the equity curve. Or this EMA could also be 34. It all depends, how aggressive you want to use a trading stop loss. One could even go lower. Anything that you think after testing suits you the best when you're trading, because that's what it basically boils down to, is that when you're trading, do you feel comfortable with implementing that trading plan after a while? If you've been trying it for a while and it doesn't, then you might want to check out what elements are making you feel nervous. All right. Excuse me. Trail stop loss. Want to focus on that. 3 things basically. Time factor. If a trade takes too long, I like to use 5 to 8 candles. Then, not to say that the trade couldn't go our way, but I've noticed that after that, the trail stop loss, the stop loss is more vulnerable to being taken out, especially if the stop loss is placed tightly. So, to avoid getting a full loss and still being able to put a tight stop loss, one can use time factor to use a tighter stop loss, but avoid the full losses that do occur when using a tighter one. All right, so that's basically often enough the balance that we see with trading is that a tight stop loss is used, which is good for the R2R, but the market eats it up in a way because it makes a lot of retracements. One could try to battle that by using wider stop losses. What happens then? Obviously, the R2R ratio is then less. So to combat that development, one can use time factor. I think it's a very efficient, interesting way of approaching that phenomenon and then striking a balance. Using the EMAs, as I said, very tight EMAs or looser EMAs, or even, excuse me, using various EMAs at various stages. If you're just at the beginning of a trade, using relatively tight ones, loose, tight EMAs, right? The T is tight, L is loose logically, and at the beginning of a trade, using tight ones. Then when the trade develops, go to loose, and then when the trade is really up in a lot of profit, go back to tight. This could be a trail stop like graph or curve for approaching the market, that you don't even have to use the same trail stop loss all the time. Candle control is something I think I should explain in the charts. Maybe time factor too. If you have questions, let me know. What I mean with candle control is that really looking at the 4-hour candle and saying, are the bears still in control? So if you look at the 0-odd downside, the engulfing twin at the weekly pivot point, for instance, take it step by step and candle by candle. Right? We have bearish candle. We have a bullish candle. It's true. But what I mean with control is that there's not a close above the high of the most dominant, latest most dominant bearish candle. That's what I mean with control. So all these smaller bullish candles are inside candles. I would not exit that trade as yet. Then we got to get follow through, so it's good we stayed in. We get follow through, we get a wick, a hammer, and an inverted hammer before. So we have to be careful with that. Then when you get the close of the bullish candle above the candle high of the inverted, of the hammer, excuse me. So basically if we get a close above the high of the candle with the red line, that's when obviously the bears are not in control anymore. This is a retracement. How far will the retracement go? It could be very short. It could be very long. I mean, we could try to, of course, do multiple time frame analysis and estimate that maybe the retracement, in our opinion, in our judgment, is going to be shallow, but it's a risky business because it could easily be something that goes further than we think. Because who knows? Maybe this entire downside is being retraced. Not only this last leg, but this entire leg. And then price could easily retrace maybe all the way back to the weekly pivot point and take us out for break even. So do you really want to, of course, risk something of a 50 pip, a bit less than 50 risk compared to, let's see, you want to sacrifice a 2.5 to 1 reward to risk trade between these magentas, to let it retrace all the way back? I would say the answer is no. I think 2.5 is good, is worth taking, especially when it's a good chance that our side is not in control anymore. Breakouts, price break below or above pivot point, PP. So when you're in a trending mode, downtrend, a break below it, an uptrend, break above it. Let's take a look. What do I mean with that in a bit more detail? This is a breakout actually today, but let me take a different example than the pound. Well, actually, the Aussie, it didn't retrace to a clear confluence. Although I was looking for head and shoulders, it didn't really retrace very deep. But if one doesn't catch the retracement, which made sense, one could trade the breakout of the daily pivot point here, right? And on the daily, for instance, look for a candle close below that level, or look for a breakout below that level. Now, in this case, unfortunately, the market really didn't go all too far. It went to L4. It didn't even hit the daily S1. And at this point, I would move it to break even, because if it doesn't continue, I would not want to stick in this trade much longer. But moving it to break even and letting it see if it could still push down makes sense, because who knows? This is maybe just a triangle, a consolidation triangle right here for follow through. So this is an example where you have a daily pivot point that was used as support and price is breaking below it. That's what one can look for. And it's a good breakout candle. If you look at the candle itself here, that's a good breakout candle. Or if you take the pending order a few pips below it, That's another way of doing it. Let me think today if there were other examples. Euro, let's see, odd. I was initially looking for downside, but then I realized that the euro is actually retracing up. You could see maybe a retracement on the euro odd. So this is not a good example, actually. Let's see today. There was a lot of bouncing about on the pound yen. Today, I don't think I have any other examples, actually. I was not looking at the Kiwi. No, that was actually it, unfortunately. The EuroCAD, but we don't have the pivot points of yesterday anymore. That's the problem. Okay. No. Well, anyhow, the break basically. That example is unfortunately the only one I can present of today. That's it. Any questions by any chance? Now, obviously, I was only discussing candlesticks. I mean, that's not the only way to trade bounces, but I do like it. It is the one that we discussed the most on strategy sessions on Wednesday in the morning as well. But, you know, you could use other things, of course, obviously. Trend lines. You could use moving averages, Ichimoku, alligator. I'm thinking, but I'm sure there are others that I probably forgot. But we can just scan through the indicator list, obviously, and we'll bump into some other things. Under your dollar, we have engulfing and a harami now, still above the daily pivot point. From a fib and wave analysis, I would expect some retracement, but let's see. Anyhow, that's besides the point. I'm getting into analysis. That's not the meaning actually for today's session. Sorry about that. But yeah. Anyhow, you can let me maybe show some examples. Otherwise, let's see. Let's take a look at the pound odd. Here, Doji 2, just like the euro odd at the weekly pivot point. So it's a similar setup. So playing a bit false there, but yeah, it is kind of the idea. What I wanted to show to you. Let me see if let me put pivot points on this one. Yeah, this EuroCAD was, you know, this was difficult because it was very close to the weekly pivot point. It didn't really have a very clear, it had a shooting star, but the shooting star just was actually shy of the weekly pivot point. So those are cases where that is difficult because it's only like 7 pips away. You know, if you're really waiting for the touch, then you miss that downside. Sometimes it could be worth it to take it a bit lower, especially if you're looking at a 4-hour chart. 7 pips is not that much. Just put the stop loss a bit safer away so that you're not, you know, putting the stop loss below the weekly pivot point in this case, but more at a safer level above maybe this resistance here, for instance, maybe 15 pips above that resistance, for instance. Let me calculate that. So one could take the shooting star, although it didn't touch, let's say. Let's assume that just for the moment. 74, let's say 77 is a stop loss. Stop loss is 46 pips. 47, excuse me. And if we then trail stop, let's see. Let's look at our candle time factor. 1, 2, 3, 4, 5, 6, 7th candle is going our way. It's close, but still within the time zone. And then this one is the exit, because that's the one where, in my opinion, the control is out of the window. You can still use shorter term moving averages to make sure that there's maybe a crossover there, but that looks like the switch. How many pips was that? This is just an example, obviously, but the pips made on this one was 74. About 1.5 to 1. But yeah, you have to be willing to take a worse price on that trade compared to the weekly pivot. That's sometimes a bit of a balance one has to find. What do you think of the other examples this week? Besides your cat, pound odd, euro odd. Well, pound dollar was good, obviously. Let's see. I didn't trade the dollar yen. No, I don't remember. I think that's it. The euro odd had a good breakout, obviously, as well, but we cannot really reconstruct that anymore because the breakout happened earlier this week. So it's difficult to show the breakout scenario because we don't have today that day's situation. But if you look at the moving averages or use trend lines, we don't have the pivot points at that point. So it's really not so valid for today's session because we're talking about pivot points. But if you use other things like moving averages and trend lines, obviously we had a good breakout on this Tuesday morning here. And it continued for quite a while. Yeah, the pound dollar is a good example as well. The Harami here that was yesterday. Like today, it actually had a similar rejection, by the way. Today too, shooting star, yesterday too. We talked about the same scenario actually, that the pound dollar is moving up, but it's going to face rejection. It was a breakout of this trend line, but it was obviously, for me, an obvious non-event, the break of this trend line, and very clear for me that this would have problems with a solid breakthrough, and this would turn into a most likely false break. And because of the weekly pivot point, because of the resistance, excuse me, because of the downtrend in play already, because of the factors that I believe were important with the reversal, I recognize this pattern of the price movement here, often in pound, how it moves and reversal. So to me, this was clear reversal movement. So when it spiked up and came close to the weekly pivot point, that was, just like today, rejection territory. So if you're looking at it from a 4-hour point of view, if you want to wait for candlestick confirmation, this Harami would be it. And one would still be in the trade if following the trail stop management. Why? Because after the Harami, we had bearish. Although this was a bullish Harami, that candle high was not broken, nor a close above it. So bears in control, and after that, bears stay in control. Still no sign of anything different than that. So with an entry at the Harami and a close above it, sorry, stop loss above it, I would still go, yeah, let's see, I went here actually above the weekly. There we go. Let's see, how much is that? About 50. It is exactly 50. Where price made a low, well, we don't know where the exit will be, but it was anyhow theoretically about 100. That's the 4-hour chart, but the 15 had wicks here too. That was yesterday. So those are our examples. Well, I don't see any questions. If you ever have questions, of course, by all means, you can catch us throughout next week. Actually, we have all kind of various webinars. We have the Learning Lab and Expert Advice and Recap, actually on Monday with Tarantula at 6 p.m. same time. And then we have the live trading labs on Tuesday, Wednesday, Thursday, with the emphasis on strategy on Wednesday. So that's the difference. Tuesday, Thursday is analysis more. Wednesday we try to focus on strategies and try to give examples and look for something that's happening now too, of course. So I hope to see you then again. And in the meantime, wish you great trading tomorrow still, and a great weekend. See you soon.
See you
I
soon.
don't know if that is it. Yeah.
Bye
Cheers.
for now. Bye for now. Cheers.